From Wall Street to managing hundreds of millions in client money, Nick and I use our alphabet soup of credentials to discuss the investing and tax strategies that actually work. Oh, and we played Division I college football together, so strap in. This one hits hard. Let's go.
Alrighty, folks, we are going to talk SpaceX, Warren Buffett, the war, and Kevin Warsh. He's just about to have his first meeting as the new Fed chair. And to do this, we're going to talk with Taylor, the CEO of Life Goal Investments, 10-year veteran on Wall Street, and somebody who constantly works with the top 1% of the 1%. Taylor, how you doing, buddy?
I'm doing great. We've got a lot of underlying dynamics playing out here. Market seems to be digesting everything incredibly well. Let's go. Let's talk SpaceX. You give it to me. Let's do it.
Yeah, so I think SpaceX is going to be interesting because, again, it undoubtedly has a level of interest, frankly, that we may never have seen before.
Never.
At least never. But that doesn't mean it's going to be a good investment.
Nope.
Right? I actually heard a very interesting analogy. Credit where credit is due. This comes from Scott Galloway. This is not mine, but I'm stealing it. He says that SpaceX, while an amazing company standalone, is being cobbled together and is now like Snow White and the Seven Dwarfs. What does Scott Galloway mean by this? This is my opinion, but I'd love yours as well. Basically, SpaceX, the company, is Snow White. Beautiful, great, yada, yada, yada. But it has been cobbled together with XAI, which is just a money-burning machine, and other things that are less attractive, according to Scott Galloway. So I'm curious, does that analogy land? I know you got young kids and whatnot, but yeah, is SpaceX just Sleeping Beauty and the Seven Dwarves, or what's going on?
I read SpaceX. I read Snow White to my daughter, putting her to bed last night. So I'm very familiar with that story. She's 4. Yeah, interesting take on it. And he's not wrong. And you know, maybe Tesla ends up being a part of that party here very soon as well. That's obviously up for debate there. But it's interesting. You know, what I'm more interested in is not as much, hey, SpaceX centric. It's more of the impact on the broader markets.
Yeah.
That is, you know, June 12th is going to be a day of fireworks to the extent that we've never seen before. What you have, and I think most people don't really understand the full dynamics of an IPO. So let's walk through that real quick.
Please.
So on IPO day, you're going to see new issuance of SpaceX stock to the tune of about 75 billion. And let me be very clear on this. What I'm not saying is that Elon Musk, employees, private equity companies that own it are going to sell it into the market. No, this is creation of $75 billion worth of new shares.
Yep.
And so to put some context around that, that is 3 times larger than we have ever seen an IPO in history. That is 6 months worth of net flows into the world's most popular ETF, which is VOO, all to be absorbed in the market in one day. What is your take? I mean, that is undoubtedly a headwind for public stocks, all else being equal.
Yeah, again, I think SpaceX is going to be such an interesting play because, I mean, if we just want to talk the real talk, not only do we have SpaceX, but we got OpenAI and Anthropic right behind it.
Yep.
And I think it's the combination of all three that's going to be the problem. I think the first one to go, and it does appear like that will be SpaceX, will be relatively fine because I've seen numbers like we've got $6 trillion in money on the sidelines. Mm-hmm. So, most of that won't go, but again, the Elon Musk factor, I think SpaceX is going to be fine. I really do. I don't think it's a great investment. I think it's going to be bid up to such an enormous level that it's not a great investment. But trust me, there will be people at the retail level that say, I own SpaceX. Even if they're losing money, they're it'll be like, it's the new Bitcoin. SpaceX is the new Bitcoin.
Yep.
It's going to be a meme stock and people are not going to know what it does. And I saw one stat that like SpaceX does 20 billion or whatever, and Walmart does 280 billion or whatever it is. And the valuations are just going to be cray. So, but that said, I don't know if Anthropic and OpenAI have a date yet, but I hear they're weeks away. And then that becomes a big problem.
Yeah. And they're not alone. Like the IPO calendar is now building. right? So the excitement around this is building the broader IPO calendar. You brought up an interesting topic there of just retail trading and the fact that this could become the next hot dot or meme stock or whatever it is. This is also an interesting play and such an Elon Musk move that they've dedicated roughly 30% of the shares to retail. So by way of context, typically retail will get an allocation of 5% on the high end.
Right.
Now it's 30%. So what you're going and seeing now is when they file their S1, which is basically their prospectus, and that was 2 weeks ago now, which is when they come to market and say, hey, here's what our company's financials are. Here's where the total addressable market is, which, by the way, they give a $28 trillion number, which is mind-blowing. But nonetheless, they bring all of that to market. And then they kind of give the breakdown of where these shares are going to be allocated. So typically what you see is the lead investment banks, which the lead investment banks on this are Goldman, Morgan, and I'm forgetting the third. They'll get a really significant chunk of that, and they'll sell it down to their underlying clientele. And then it'll go to people like Schwab, but also now we've got Robinhood and these underlying. So it's not going to be just incumbent upon the normal markets to absorb this underlying new capital that's being created, this new entity that's going to be basically a sponge taking liquidity out of the market. It's also going to be incumbent upon retail's ability to digest it. Now, I get from your interpretation, and I don't think you're wrong, that retail will happily digest.
Oh, no question. No question.
But it goes further too. So that's the IPO date of June 12th. But what happens when companies IPO is there are lockout periods. And so the insiders that hold it ahead of time in the private equity market, they experience lockouts. And so it might be a month, it might be 3 months, it might be 6 months, it might be 12 months. Now, Elon has structured this, actually, I think very, very well.
I agree with that. I think he's agreed to. Yes, I agree. Go ahead.
So part of it becomes available after they report Q2 earnings, only if the Q2 earnings come in above forecasts. Right. And so basically what they're doing there is he's saying, hey, I'm not going to allow insiders to trade this into a downward vacuum. If we don't report earnings at where the market thought and the stock starts to sell off, I'm not going to let people dump their shares into that vortex. Smart. But my point of bringing all of this up is in time, you're going to see selling at different incremental rates over these staggered lockout periods for these insiders. You think about private equity, like private equity, their mandate is private equity. It's not public equity, which SpaceX is going to be. So they are going to do their best to get out of these shares as quickly as they can. And so that's another headwind. You think about these employees. A lot of these employees have had 50% of their paycheck be paid in SpaceX stock. So like they're really rich on a computer screen, but they haven't felt rich in their pocket. They're going to want to get out of this and liquidate some of it and become rich on paper and go out and buy a Lamborghini. So you've got all these sellers that you know are going to come, and the market's now got this new massive entity selling things in the market that didn't exist before. The capital's got to come from somewhere. So that's persistent headwind, right? And then again, you throw Anthropic and OpenAI on the back of it. But you think about it from the other perspective too, of like, what's this mean for private equity? Private equity is about to get the biggest paycheck it's ever gotten. And private equity buys private equity. So what's that do to valuations of companies that are younger in their life cycle in the private equity pipeline? So it creates this headwind for public equity and a significant tailwind for the much smaller private equity market.
Yeah, this is going to be one of the biggest liquidity events we've ever seen. And that is both for the employees and private equity. I heard, and again, you're the guy that's in this, that some early investors, if they would have dropped 50 grand, they're going to turn that into something like $18 million or some crazy ass number. Is that true?
Yeah. Those numbers, that math. There's been $11 billion of checks written for equity in SpaceX. It's going to come to market at whatever. We don't know exactly, but
call it $2 trillion.
Yeah. That's 180x multiple, right? And that's average. That's average.
That's not early.
That's not early, right? So it's just absolutely bananas in the wealth creation that a company like this can provide. And granted, this will be the biggest ever, right? But Anthropic's right behind it, and there is insatiable demand for Anthropic as well. Anthropic, this is nuts, and I know you've seen this. Anthropic in Q1 80x their revenue. That's not an 80%, right? That's not an 80% increase. That's an 8,000% increase in their revenue.
That's nuts. That's to say that's unprecedented is an understatement and a half.
It's really interesting. So there's like this paradigm playing out in AI right now where every bit of compute that's being built is being used. Like tokens are being used, right?
Yes.
And so it comes to this question of like, hey, do we just need to continue to build more data centers and more data centers and more data centers? Or the other side of it is like playing devil's advocate is Uber has said, no more tokens.
No mas.
We can't justify the spend. Yeah. And so therefore we're not going to use any more compute on this.
Yep.
And then I think the kind of the tertiary thing is whatever we've seen in the past technology wise is we get more efficient. Right. And so maybe there is, DeepSeeks out there that can, maybe they created ChatGPT with $6 million. Maybe they didn't. Like we debated that a year ago and probably not. But nonetheless, like, are we going to get a lot more efficient at this? And how does that go to the digestion of all this infrastructure build out? It's totally up for debate.
Yeah. I think, you brought up Uber, but I'm sure you heard this as well. I think the most insane thing I've heard around AI in the last 7 days is there was a large public company who burned $500 million because they forgot to meter the usage of AI.
I didn't hear that. That's
dude, $500 million.
Who is it, or didn't they divulge?
They haven't divulged yet because I'm sure that would be quite the embarrassment. But it's got to be a big company. I mean, there's probably 50 or less companies that could, stroke that check.
Yeah.
So, the other thing is, I don't think Anthropic is the good company that they pretend to be. I was listening, I think it was the All In podcast this weekend, and Anthropic seems to have this godlike attitude, right? They're trying to birth a deity. And that is, that's just not okay. I think this whole Anthropic, we do good things, I think it's a smokescreen. I think they're evil people.
Well, the CEO comes out and just says the most blasphemous things that anyone ever said. You're like, what? Who is your PR person?
Yeah. Get some media training, you jackass.
Between him and Altman, it's like, who are these morons, these nerds? Like, guys, you have to sell this to investors at the end of the day, and have to sell it for a greater good of humanity at some point. And you guys are just openly doing the exact opposite. What are you doing?
We're going to whack 50% of the employees. You're not going to have a job anymore, blah, blah. Yeah, they just, they don't get it. But the other thing, I think we talked about the last time we spoke, I actually think the bigger threat to AI is China. And you brought up DeepSeek. I truly believe, and I've said it 5 or 6 times now, that China is executing, what we call deal stumping or steel dumping in the 80s. I think they have developed a model that is good enough, that is somewhere between 10 and 30x cheaper. And they're just going to keep dumping into the US. And then eventually all of these crazy stories about Uber and $500 million, people are going to stop using the expensive stuff and they're going to use good enough. And that is just going to burn billions of dollars, if not hundreds of billions of dollars in capital. Because, these data centers, if the technology is not being used, the data centers are worthless. It's going to be interesting. Let's transition to the war. Right. We just had an update in the last 10 minutes that Iran has stopped negotiating. They're going to block the Strait of Hormuz. We have the Exxon COO or somebody talking about $150, $160 oil. Where do we go from here?
Who the hell knows? And who the hell do you trust? Right? Do you trust our commander in chief? Like, I don't know that you can fully take what he says as 100% truth. And that's not here nor there.
Please stop it. You can't take what he says as 50% truth.
I was being a little bit more politically inclined there.
Come on.
And like, in his defense, and I'm not a MAGA hat wearer by any stretch of the imagination, but maybe we don't want him always telling the truth, right? Yeah. But the other side of it is like, who are we dealing with over there? Like, in reality, who the hell knows who we're dealing with on the other side? Who the hell knows who's calling the shots? Like, we took out the supreme leader, they put another one in place. Is that supreme leader actually the one calling the shots, or did they put him on the beheading throne, putting him in that position? And it's actually, some underlings that are making the decisions. I saw a really interesting take on it the other day that says that Iran could actually be using their negotiation, whatever, to their own financial benefit, where they let some good news come out, they let some good news come out, they let some good news come out, they short the market, and then they say, by the way, we're blocking the Strait of Hormuz. You're all effed, and thank you. We just made a boatload of money because our economy right now is shuttered. We don't have any income coming from any direction because we're completely oil dependent. Nothing's passing through. So we got to get creative here. And it's pretty easy to come out with a bombastic headline. We know the market's going to sell off on it. We'll short it. Bang.
Yeah. Yeah. No, that absolutely could be. I think the biggest thing when I look at the war today and is I don't think Trump has a way out. I really do think Trump thought this would be a version of Venezuela. Maybe it's not a 3-hour operation, but I really do think he thought it would be a 3-week operation. We're now into 3 months or whatever it's been. And yeah, I've been pretty clear. I think this is not over. It's going to get worse before it gets better. And my fear is we have $200 oil sometime this year because of this.
Well, my fear from a market participant standpoint is that everybody on the planet disagrees with you. And what I mean by that is every market participant on the planet.
Absolutely. Yeah.
I listen.
I'm used to that, Taylor. I'm used to that.
Yeah. Well, I know. And that's what we love about you is you're not afraid to stick your neck out there. But I listened to 9 podcasts this weekend. I was running around the house, doing chores, etc., whatever. And every single market commentary podcast that I listened to started out with, well, this is under the presumption that we come to a deal relatively quickly. And that's a scary thought when everyone's on that side of the trade, because that's what's priced into stocks right now.
True. Very true. Yeah.
So I tend to agree. So now I go here. I tend to disagree with you that there will be an off ramp that just literally the Republicans are going to get blown out of the midterms.
Absolutely. Blown out. Oh yeah. If this doesn't get shut, absolutely. But I think at some point Trump's going to say, fuck it. I'm still the president. I've got 2 more years to run and I'm going to do what I do. Because I think he's trapped. There's no good exit. There's just no good exit. And oh, by the way, let's forget this is a 3-party battle. Just because we want it to stop doesn't mean Iran wants it to stop. Doesn't mean Israel wants it to stop. You just drop one little missile in the wrong place and kill enough people, this thing gets freaking nasty fast.
You see an oil tanker take a missile right now, and we are all effed. Yeah,
all effed.
I will tell you this. The one thing Trump has done that I don't think is by coincidence, that I think is very smart, and let me be clear, not everything Trump does is smart, is he has not stated a goal.
True.
He has not stated a goal. So at any point he could back out and say, look, we decimated their economy.
Oh yeah.
We decimated their ability
to claim victory really easy.
That's it. Yeah. That's it. Take his victory lap. Like what I think the intent is to get them to demilitarize their nuclear capabilities. Absolutely. Like I think that was absolutely the intent, but you have not seen that publicly said like, hey, we are in there to do this primary task. This is the sole task that we are there to accomplish, because right now we certainly cannot say that they are not enriching uranium or are disposing of their enriched uranium. And I think that is wise for Trump to not have said that, because in the event that things do get nasty and we back out, we don't back out with our tail between our legs.
Yeah. Yeah. The wars are messy, right? They're easy to start, hard to finish. I do sit on the side that this gets worse before it gets better. And boy, have I never hoped to be wrong in my life more than this.
Me too. Yeah.
But that doesn't change my opinion. So let's switch up to Kevin Warsh. Kevin Warsh is going to have his first Fed meeting later this month. I actually think if you look at Kevin Warsh's 90-day or 6-month plan, I think he's going to try to do 4 things. So I'm going to give you the 4 things. Let me know what you think of these, reorder them, whatever you want. But these are the 4 things I think he's going to try to do. Number 1 is I think he's going to change the communication. I think he believes that the Fed talks too much. I think he was raised in the Greenspan era where only the chair talks and everybody else sits silent in the back of the room. Yes, there's occasional, college presentations and, all of that, but stop talking to the media, right? Only the chair will do that. So I think that's one thing that he will bring and institute. Also, he will get rid of the dot plot because I don't think he likes the forward guidance and the dance of that. So I think that's number one. Number two, I think he's going to try to change not really the definition of inflation, but the definition of inflation for the average consumer. What do I mean by that? For the last 30 years, we have been told ad nauseum that the favorite Fed metric is PCE core.
Yep.
Right? PCE core, PCE core, PCE core. And I think Kevin Warsh is going to come in and try to play magic and flush PCE core down the drain. He's going to pull out something called trimmed mean inflation, something produced by the Dallas Fed. Now, why is that? Well, I think he honestly believes it's a better metric. I think he believes ignoring food and energy does a disservice to the American public. But it's not lost on me that PCE core today is 3.3 and trimmed mean inflation is 2.3.
Right.
Yeah, I mean, just magically change the definition. You can almost declare victory.
Yep.
Right? So I think he's going to do that. Number three, I think he's going to shrink the balance sheet. I think this is going to be a surprise to a lot of market participants. I think he will never buy mortgage-backed securities again, right? I think he's going to take the duration and actually shorten it, which is frightening for a guy, who understands the math. And then finally, he pinky swore to Donald Trump to cut rates, and he's going to do his best to do that. So I think those are the four things Kevin Warsh does in 90 days to 6 months. What do you think? What I miss? What I get wrong? What do you think?
Well, I can't add anything on because my brain can only handle 4 things, which I'm going to split into 5 things. So I'll just comment on what you said there. So I think you are 100% correct that the communication, point one, from the Fed presidents all over the United States needs to stop, and I think he will stop it. I think it's crazy. I think that they set themselves up for future jobs, book tours, etc., on what their commentary is. And they don't control their commentary well. And what the market will do is parse every last word of what they say. I hope, on the same token, that they don't do away with the dot plots.
Yeah.
I think the dot plots forces folks to cast their opinion. And I think the market does take real direction on that. And I think the market should take real direction out of that. I don't want the communication because they're terrible at it. They say shit they shouldn't say, and everything gets scrambled by the news, and they pull out one line segment that is going to create a headline, and the market trades off of it. So point one, correct. Point two, I think you're right on him changing. They're trying to change his best the way that we define inflation and what we're tracking most closely. It'll be interesting just to see how he integrates with the underlying current chair of Jerome Powell, and then just the broader members, because they're used to pushing the PCE topic, and the ability to change that title and change the importance and put a primary on something else will be interesting. And it's so convenient, to your point, that the timing of that is one looks really good and one doesn't.
Exactly.
Shrink the balance sheet. I definitely agree with that. That is, he's a hawk when it comes to that. So he's a hawk and a dove. He's a hawk and a dove. He thinks that balance sheet tightening needs to happen. And so his ability to control that is not buying treasuries in the open market to the extent that we are, not buying mortgage-backed securities. Market manipulation is tough because at the end of the day, like, that's what the Fed does when they begin purchasing. And I think, broadly speaking, let markets trade where markets trade. I do have this nagging, like, maybe this is my very leftward leaning or whatever thought in my head that, like, man, wouldn't it be nice for them to have bought mortgage-backed securities a year ago, 2 years ago, and try to pin down rates a little bit for that first-time home buyer?
Sure.
And maybe not be buying some of the other things that they're buying in the market. And by the way, like, now I'm playing Monday morning quarterback. They bought mortgage-backed securities for far too long.
Oh, amen. And too much and too long. Yes.
And that was just stupidity is all it was, because you had a housing market that was absolutely ripping, and then you're adding to it by suppressing as best as the Fed could, even though that wasn't what they were saying, mortgage rates. It was that was stupidity. But I do like it when potentially, as I know it's manipulating the market and I'm a free market guy, I do like the thought of, hey, let's try to pin down mortgage rates at times when they get out of control. So I guess I agree or disagree there. And then to your point, Number 4, he's going to try to cut rates. Yes, but he has a very, very, very tall task on his hands right now.
He's only one vote. He's
Yep.
only one vote.
He's only one vote. Right. Yeah. Right now, there's a 0% chance of a
Zero.
rate cut this year. Zero.
Yeah, zero.
40% chance of a rate hike this year.
Oh, by the way, which is the guy that told you a rate hike was coming first? Right here. This guy.
And I'll tell you what. So I heard a buddy of mine, his name is Darius Dale. He's a rock star. So literally played offensive tackle at either Yale or Princeton. Dude grew up in a van, homeless. Princeton grad. He is one of the absolute sharpest market commentators that there are. He runs a firm called 42 Macro, and he puts out macro commentary on a day-to-day basis. He is the best I've ever seen at breaking down really complex topics into simple bites. And he is just a rock star. So check out Darius. And I haven't spoken with him in a while, so he has no idea that I'm saying this, but he's incredible. But he made a comment the other day, and I thought he was, just spot on. He's like, whether we're in a bubble right now or not in a bubble, he said the market will bubble based on one thing, definitively. If Kevin Warsh comes in and says we are going to stare through persistent inflationary pressures, which is what he's going to have to do, he's like, the market will undoubtedly bubble.
Yeah, it'll rip.
Yeah.
It'll rip. Yeah.
So it'll be interesting to say that, but he was the one that put it so bluntly that is a very binary outcome. And to be clear, that is a complete unknown. No one knows how he's going to take that. And that's why everyone says the market tests a Fed chair. The market tests a new Fed chair. That is how it's going to be tested right there.
All right. Well, let's close with our fourth and final topic. We got Warren Buffett. There's actually two things we should talk about. One, the Warren Buffett indicator has never been this high before. From memory, it's about 260%. Again, market cap divided by U.S. GDP. But we also have, again, it may not be Warren Buffett, maybe it's Greg Abel, but they just dropped $6.8 billion buying a home builder. So feel free to talk about either one or both of those.
Yeah. So on the Buffett indicator, it's at nosebleed level. Let's not call it anything different than what it is.
Jeez.
It's
really
never been higher.
Never been higher. You're going to call that nosebleed? Oh,
nosebleed,
okay.
or
Undersell it, Taylor.
My other daughter, not the one that I read Snow White to, woke up in the middle of the night, comes down. She's like, my nose is bleeding. She's got nosebleed issues. I'm like, middle of the night. I'm like, oh, she's just gushing blood. I'm like, this is awesome. But anyway, it sounds scary when you just say this is, hey, at all-time highs, never been higher. I think the realization of like the market right now is that, and whether this lasts or not is up for debate, is that AI is ruling the planet.
Oh, it's everything.
And so where is the money flowing into? It's flowing into the United States, and companies are taking it, and that's driving that Buffett indicator higher and higher and higher. At the same time, they're also growing earnings at absolute breakneck pace. Breakneck pace. Not only that, they're growing profitability at breakneck pace right now. So it's you have earnings growth, you have profitability growth. They're not skimming and doing things like that. You're having ballooning of both those underlying numbers. We are the world's AI. We are leaps and bounds ahead of everybody else. And I know that your comment earlier on China potentially coming into the fold and producing cheaper options is certainly real.
Yeah, well, let's be clear, cheaper and good enough. I'm not saying they're anywhere close to where we are technology. I've never said that. But again, at the end of the day, cheap enough and good enough sometimes wins.
Yeah. If you can, take my email that's written poorly and make it sound good, that's the use case for a lot of people for what we're using here. So I completely agree with that. But like and now you see, but I guess my point of this is like, we are kind of years and years ahead of most people. We have the talent here, more so than anywhere else on the planet. And like SoftBank now, just this morning announces a $5 billion.
Yeah. They also say it's going to be 50x bigger than .com.
Okay. Yeah. So there you go.
And
they're going to start to build out. Okay. So you're saying the AI build out will be 50x.
Yep. That's what he said this morning. Mohata-san or whatever his name is.
Yeah. And he also announced a big investment in France to build out their AI, which I thought was interesting as of all places, France is the place that they have chosen, which is odd to me, but nonetheless, so we are trying to, create some global, when I say we, the globe in general is trying to create some competition globally. But right now, you describe why the Buffett indicator is so high. It's because of AI, and at least at this current juncture, It's not to say it can't change going forward, because it absolutely can.
Oh,
at
it
the
will.
snap of a finger. But
yeah,
right now, I think it's actually relatively justified. Whether that's to say going forward it can continue to justify itself, that is totally up for debate.
Yeah, I think the biggest thing about the Warren Buffett indicator, if you really study this like both of us have, it's not a market timing indicator. It's
No.
never been a market timing indicator.
No.
It's an evaluation of where we are, kind of market sentiment to the actual economy. So yeah, this is just because it's at the record high doesn't mean, in fact, it will probably go much higher.
Yeah.
But at some
I mean, you look at earnings, right? And price to earnings multiple. In a lot of areas in the market this year, you've actually seen contraction. Like Nvidia stock cannot get out of its own way, yet it's 2xing its revenue or forecasting 80% growth or whatever. So what you're getting there is just multiple compression, which makes it a more palatable investment than it had been 2 years ago when it was scorching further north and no one could actually catch up to it, and it was trading at a multiple that was nosebleed levels, to use that continued analogy. Now it's not anymore. And so that it's just interesting to see that, like, and it shouldn't, but if Nvidia traded the multiple it traded 2 years ago, it'd be an $11 trillion company or something crazy like that. It'd control the world from a capital standpoint.
Yeah. Well, let's close this out again. Something happened over the weekend is Taylor Morrison is joining the Buffett family. Berkshire Hathaway, $6.8 billion certainly sounds like a lot of cash, but in reality, it's less than 2% of the hoard of treasuries that Berkshire Hathaway has. Any thoughts on this? I know it just hit the wire. Maybe you don't have an opinion, but what say you about this acquisition?
I think that, to your point, it's pennies on the dollar, but it's Buffett or Abel doing what Buffett or Abel do, and that's buying depressed assets. Home builders have been an unloved area because the housing market's frozen. You got inflationary pressures driving labor costs higher. You've got them driving input costs higher. You've got high interest rates, high mortgage rates. But their bet is that, some of that will normalize. And their bet is also the fact that we've underbuilt now. And that underbuilt has been persistent for a 15-year period of time.
Yeah. Well, this is always a lot of fun. I love hitting these hot topics with you. Where can people find you?
Yeah, find us on Instagram, on TikTok, at Life Goal Investments. Daily 60-second videos.
Folks, again, I say this all the time, but check him out on Instagram. I have no idea how he gets 10 minutes of value in 60 seconds, but he routinely does it. So check him out, subscribe, send him a note, say hi from one rental at a time. I would greatly appreciate it. Take care. Have a good week.
You're the man, Michael. Thank you. Quick ask. If you're enjoying the show, hit the follow and drop a rating. It helps more folks find our podcast. Thanks so much.
Information discussed in this video is for educational purposes only and should not be considered investment, tax, or financial advice. Investing involves risk, including possible loss of principal. Always consult a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.